Hey everyone, in this video we're going to be going over some catalysts for Rivian stock in the near term and long term, but before we do, if you're not subscribed to the channel, please subscribe. And if you could put a thumbs up, it really helps the YouTube algorithm. Now let's get into this video. As of this recording, Rivian stock is trading at $17.71 a share. That was the close on Friday. We're going into Monday tomorrow, and this is a big important week for Rivian because earnings are coming up. And we'll get into that a little bit later in the video. But their market cap today is $16.79 billion. Their 52-week high, so for the last year, is $35 a share. And their 52-week low is $11.68. At their all-time high, when they first IPO'd, they IPO'd around $129, and I think they went up to close to $180 even before dropping down. Now, the stock has obviously come down tremendously. Now, I wasn't a buyer or owner of the stock in those early days. It was clearly overvalued back then. Not that it can't be those values in the future, but for where they were at, it was clearly overvalued. Today, though, I don't think so. I think they're actually extremely undervalued, and we're going to talk about some of the catalysts going forward. First off, let's just go over their market cap. When we look at their market cap and we subtract the cash they have, and we subtract Amazon's investment, because we know Amazon's a long-time holder of this stock. They're going to be in this for the long run. They bought in privately, and I don't think they have any intention of ever selling. If anything, I think they could be a possible backstop to buy the company if they ever were in a position where they couldn't raise money, and they just wouldn't want their investment and the brand that they've built to date to go to waste. I could see them basically bringing them under the Amazon umbrella in a worst-case scenario for them. Obviously, there's always the chance of bankruptcy, but I just think it's more likely to see Amazon acquire them if things got bad. But let's get into what I actually think will happen. Well, first off, their current market cap at $17 billion. We subtract $10 billion because they have $10 billion in cash. So, that's in the bank. When you buy this stock, you get ownership of that $10 billion as well, proportionally. So you're left with $7 billion. Now, Amazon owns 17% of the company. At today's market cap, that's about $3 billion. So you're left now with $4 billion. They have about $3 billion of debt or so, call it, so $7 billion, when you add that onto the $4 billion that's left. And you're basically paying around a $7 billion market cap to get this company, not including its cash, not including its debt, and taking out the fact that Amazon is owning 17% of the company and has probably no plan to sell the stock. So what do you get for $7 billion? Well, they've spent more than $7 billion to get to the point they are today. If you take into account all the capex, building out the factories, the time and talent that they've brought in that it takes to build such a team at Rivian, the brand equity, what is the brand Rivian itself worth, so some of the intangibles, and all of basically the R&D that they've done to build the enduro motor, to build the software stack, a lot of R&D and things that also just aren't going to pay out today but are for the long run. So all in all, when you look at it at a $7 billion market cap rather than a $17 billion by subtracting those things, it really looks extremely cheap. And when it was $11 a share, I was buying at that price because when you took out the cash, you were getting the company for free. It was really ridiculous in my opinion. It's only a bad purchase if the company goes bankrupt. And obviously there's always that case, especially as they're burning lots of cash. But I just think with the product so good, and for many other reasons, this stock is going to be able to pass that inflection point of profitability down the road and be self-funding and not have that bankruptcy risk. So getting into the next thing, the short interest on Rivian right now. On October 13th, short interest was at 99.5 million shares short. This is up from 86.6 million just 2 weeks earlier. The short interest is at these all-time highs. Now, I'm waiting for the next short interest update to see how the shares, if anyone has covered as the stock has come down, or if they've increased their shorts. Because a lot of shorts, they short a stock like this because they think it's going to zero, not because they just want to make a quick buck. Because if you're wrong on a company like this, as we saw with Tesla, the short squeeze will kill a short badly. It really, really can go the other way when you short a stock. And I think for innovative companies, it's one of the worst decisions a investor can make. So what does that mean, 100 million shares short? Well, the float is 658 million shares. So more than 15% of all stock that is moving around and being traded and whatnot has to be bought back. That is a ridiculous amount. More than 15%. Now, that doesn't just mean when they buy it back, we're going to see the stock go up 15%, because this is a domino effect. This is what happens with the short squeezes. When some shorts have to start covering their position because the stock, as it goes up, it can infinitely go up. So there's no limit to the loss. It's not like when you buy a stock, if it goes to zero, you lose whatever you invested. You put 10 grand in, it goes to zero, you lose 10 grand. When you short a stock, you have to buy that share back. You sold it to get money, and then you're buying it back hoping to buy it at a lower price. So as it goes up, you have to pay a higher price, and it could go up to any level. So your losses are infinite, but your gains are only maximum at 100%, because it could go to zero, and that would be an 100% gain. Your losses are infinite. So as it starts to go up, with any good news, with any good catalysts that bring this stock up, some shorts can't handle that pressure. The stock, it's getting too expensive. They get margin called, etc. They have to buy the stock. Buying the stock now increases the demand of the stock. There's always that supply demand level of shares available to purchase and at what price. So as more people have to buy the stock continues to go up. That pushes bigger whales that are shorting it to have to, now it hits their threshold. They have to sell, buy it back. Continues to push the stock up, and basically they're buying it at higher and higher prices, which leads to a much higher gain than the 15%, for example, you could get if everyone were able to buy it today at the same price. So these short squeezes could have massive, massive effects on the stock going up ridiculous amounts. Now, nothing is certain, but at a 15% plus shares shorted of the float, I mean, even if you just look at total outstanding shares, it's more than 10%. Like, this is a prime candidate for a short squeeze on any really good news, especially really good earnings. So I do really like that there's a high short interest, because it allows me to buy more stock at a cheap price that I know these guys, it's artificially cheap, because they have to buy the shares back to close their position. Now, some more catalysts, things that we've talked about in the past, but are obviously still catalysts when they actually happen, like the North American charging standard. So the Tesla charger that you would basically know on superchargers on Teslas is coming to Rivian. Rivian cars will have the NACS plug on them. This will be later. It's not happening, right now. This is going to be adapters coming in 2024, and then 2025, I believe they want to actually put the port on the cars. And then the Rivian Adventure network will have North American charging standard ports as well, plugs, to be able to plug into future Rivians that have that port. But more importantly than just future Rivians is that any Tesla will be able to pull up to a Rivian charging network, the RIVN network, and be able to charge there. Now, that's extremely important for Rivian, because that is going to make these get to positive cash flow much faster, because rather than only supplying chargers to just Rivians, which is what they do today, it's actually going to be supplying chargers to all Teslas, where there are a lot more Teslas on the road than there are Rivians. So for the charging business portion for Rivian, this is a huge, huge pro. And on some other RAN news, we know that Rivian is now going to be charging for Rivian's basically charging at Rivian networks, no pun intended, but they always were giving free charging to all Rivians, and now they're going to start to charge Rivian users to use the network, which makes sense because it costs them money to run it, to build these, to expand it, to pay for the electricity, etc. So obviously, I think everyone should pay for their own charging, just like everyone pays for their own gas with ICE vehicles. And they don't have that overhang that Tesla had when they were offering free supercharging for life on cars. They just basically said, hey, the network is free for now until they decide to change that. And now is the time that they're changing that, which is showing progress and showing that they're updating systems and working on the software and different things for the payment terminals and being able to do more than just one thing. Rivian is really expanding and following their goals across multiple fronts, from charging, software, the app software, the hardware. It goes on and on. Even the software, for example, the Fleet OS. I mean, there's multiple different types of softwares that they're developing for different parts of their business. And they do this all simultaneously. I mean, besides Tesla in the auto business, I really don't think there's anyone getting to the level of vertical integration across all these things that Rivian and Tesla do. Now, bringing that back to these Fleet OS and Rivian EDVs, that EDV program currently is under an exclusivity contract with Amazon where they can't sell EDVs to anyone other than Amazon for, I believe it's 4 years from the date that they got the first delivery to Amazon. But Amazon's an owner in Rivian and invested early on. They own a large stake. So I assume they want them to succeed. And they know that if they don't need all the vans that Rivian is making, if Rivian is able to produce more than Amazon's willing to take, it just makes sense to end that exclusivity early. And I know they're working on that because RJ has talked about it. The CEO of Rivian, he's discussed how they want to basically terminate that early. They're in discussions with Amazon to do that so they can start running additional shifts and ramp up the EDVs and sell them to other companies. And that also will bring in additional software revenue because with every EDV they sell, they are also selling a subscription for the software to manage fleets, basically, for different commercial companies. So the idea would be that when it comes to it being a catalyst, the moment we get the news that this contract is basically going to be over and the exclusivity portion, and that they are going to be able to sell to other companies while still selling to Amazon, that's going to be a catalyst in itself. It's going to be great news for Rivian. I see the stock doing, okay, pretty good on that news. But even better so is that catalyst is not a one and done. It's an ongoing catalyst as they keep announcing new partners. I mean, imagine they say, hey, we just made a deal with UPS. They're going to take all these vans over X amount of time. Then, we see a month later, they make a deal with FedEx, USPS, DHL, Costco. I mean, it doesn't matter. ShopRite, it could be any company. As they make these deals, it's like the Tesla Semi was getting deals, except this is such a higher volume than semi trucks. There's so many more use cases right here for these vans. And I really think we're going to see a lot of really big, great deals come out of this, especially since Amazon is finding great use in them. And they also are giving the software, they're not just supplying the car itself, but a ecosystem to run a fleet. I think there's going to be some really, really great deals, and those are going to be huge catalysts, I think, for the stock. And it's okay if these deals are not going to mean much to the bottom line in the beginning, but it's going to be the start of a growing business on the commercial side for Rivian that is going to have also software margins attached to that business long term. So I am very excited for that exclusivity to be over and to see what Rivian is able to lock in deal-wise with other companies. Now, when we talk about their margins, this is a huge catalyst as Rivian continues to improve on these margins quarter over quarter, and as they secure new deals with suppliers, they vertically integrate further and make adjustments to the factory line to increase efficiency of the lines and ramp the production. Now, we're seeing like Q3 2022, they were losing like 140,000 or something a car, and every quarter they continue to drop that down. I mean, I think it was like 300 grand at one point further back. And that has dropped all the way down to like 33,000 a car in Q2 23. Now, that's obviously still bad, but when you see all these articles come out, like Rivian loses $30,000 for every car it sells, they're not really giving you the full picture. I mean, did they say that just 3 months before that they were losing like 60,000 or whatever, 70,000 a car? If, 6 months before that they were losing 120,000 a car. I mean, they're not explaining that this curve, towards profitability doesn't happen right away. Quarter by quarter, as they ramp this factory, the losses will get smaller, and eventually go positive to positive gross margins. Now, if you look at the total vehicle produced by quarter, we'll see this chart, which now obviously looks a lot better. In 3Q, we know that they produced 16,304 vehicles for the quarter. That's up from 13,992 just 3 months prior in the second quarter. And if you look at that as it not just every 3 months, but you look at it really year over year, in the third quarter of 2022, it was just 7,363. So, more than doubling the amount of cars they're producing. And obviously it's going from a small base, but we're still really, really small picture for vehicles delivered for Rivian in the grand scheme of things. This is still extremely early days. We're talking about they're on a run rate of like 64,000 cars a year. it's going to get significantly higher than that going, into the later years. We're going to see hundreds of thousands and then I believe millions of cars a year as well. Now, another catalyst is the factory that they're building for R2, which is in Georgia. The progress for this factory is going to start up in really early 2024, and we're going to probably get some great updates. I mean, Rivian's been great on social media, sharing different things they're doing, weekly updates and whatnot. And I'm sure there's going to be a lot of updates as this factory is getting built and becoming a reality to be producing a global car with R2 platform. And we know the R1 is great, but it's only for a certain market at the price, of 70,000 plus. So introducing the R2 is going to be vital for them to get on a global stage and have massive high volume vehicles delivered. So the R2 program is going to be massive, in my opinion. It's going to be a global program where they're not just going to be selling in the United States. And we know what happened with Tesla when Tesla released the Model 3. Before the Model 3, it was just the Model S, the Model X, and not just Tesla, the company, but the stock went up like crazy. The company as a whole became a much bigger global player and really transitioned into this behemoth of a company with the scale and volume of the Model 3 and Model Y. Now, Rivian's Model 3 moment is the R2 platform. They're going from, like Tesla made the S and X, Rivian makes the R1S and the R1T, higher end $70,000 plus cars, They're going into that global, high volume, high production, and hopefully high margin for them business when it comes to the R2. So we're talking $40,000 to $60,000, and much higher volumes in the millions down the road, I believe. Starting out with like 400,000 capacity in the first phase. Now, to expand their brand, besides that, they're going to be opening up lots of spaces. We've already seen some really cool spaces. For example, they're turning this historic movie theater, kind of reviving it, putting they already have the Rivian logo up there. It's going to be a showroom for Rivians. You'll be able to hang out. They're going to be playing movies, different things. So they're doing really fun ideas with these spaces and just making beautifully designed, I want to call them like stores, but they're really not. The reason they call them spaces is it's not a store where you go to, it's not a dealership. It's not a store where you go to buy a Rivian. It's there so you can feel the vehicle. You can test drive it. You can see it in person. You can talk to the employees and ask questions about it. It's a space to go there and basically resonate with the Rivian brand. And I think that is going to help extremely well. Tesla does this, but not in the way Rivian does. Rivian is doing this with really a nice taste, with outdoor, very brand ethos, bringing plants and things like that into the store, whereas Tesla's very minimal. It kind of reminds me of Apple. Early days Apple would have like these just white stores or all metal kind of stores looking like very, very modern, futuristic. And now today Apple, they've kind of shifted with the times where you go into their stores and like, yes, it's still minimal, but you see plants, you see more wood, you see things like that. Rivian has that next step Apple look, and Tesla to me kind of still has that first original like futuristic Apple look. Now either way, that's really not the point. The point is that these spaces are going to bring lots of brand awareness, which will ultimately lead to I think a lot more sales of the product. Now Rivian's design, when we talk about their design in their spaces, we also talk about their design in their cars. Rivian has this design aesthetic that kind of mimics like a Range Rover feel to me, that boxy look. It's a lot closer to a Range Rover in quality and things like that to me, the interior, the exterior, than it is to a Tesla. And that's for hardware. But when it comes to software, I mean, it's just like a Tesla. Big screen, get rid of all the buttons you don't need, very digital first, and extremely, easy to use user interface. They got the app. So very tech forward, but with that luxury kind of design hardware wise. And when I say hardware, I'm just kind of talking from a design standpoint, not the design of their motors and this and that, or their batteries versus like, an ICE vehicle. But when you're buying a car, you're really buying it based on looks. You're buying it on other things, obviously like range, price, there's a lot of things to it, but there's a personality. You have to love the look. It's a piece of property you have. And the look of a Rivian is distinctly different than the look of a Tesla. Now, I do think it's pretty important to note that this isn't a one company wins all type of industry. There's a lot of industries that we're used to just seeing one or two companies win them, especially in the tech world, smartphones, laptops, things like that. You're used to like one or two companies really own the market and the rest are playing for peanuts. Well, in the auto industry, there's 90 million vehicles sold per year. Toyota's the one that sells the most of them, and they sold in 2022 around 10 million vehicles. Tesla has extremely high ambitions for their long-term 2030 targets. Tesla wants to be able to produce 20 million vehicles. Now, that is basically double what the biggest car production company, Toyota, has ever done across all their vehicles, being around 10 million or so. So producing 20 million is obviously extremely high goal. Tesla's at like 1.8 million for this year. Do I think they can achieve it? I do think they can achieve it. And I am a believer in Tesla, and I love the company. I love the stock. That said, even if they do achieve it, there's still 70 million vehicles that need to be sold per year. And what that basically translates to is you can be number 5 in this business and still be a massive winner. It's not just number 1, it's not just number 2, it's not even number 3 or 4. You could be number 5, 6, 7 and still be a massive winner in this business. And I point this out just because Tesla being the winner doesn't mean Rivian can't win. Rivian can sell millions of vehicles while Tesla achieves all of its goals. And I would even argue that if Tesla achieves all its goals and the better Tesla does, it helps the EV industry as a whole, and it actually will improve and help Rivian's prospects as well because of how big this market is. And it's more about turning everyone away from ICE vehicles and into EV buyers. So a car is a personal piece of property, like I said. Tesla's giving away, in my opinion, so many of its moats. Things like the supercharger network, allowing everyone to get access to that, or licensing out FSD. As it gives away these moats, I mean, that's a huge win for Rivian and all other EV makers. It kind of doesn't make sense to me. It does for certain reasons, but that's for just a separate video. But Elon's against the whole idea of having a walled garden, which obviously Apple's someone who's famously known for having a massive walled garden. And Elon's against that. And him being against that is like the ultimate gift to Rivian and other EV makers, but mainly Rivian, because Rivian's the one really pursuing this, like full steam ahead more than anyone else, I think, on a full platform basis, hardware, software, etc. So if you get rid of that walled garden from Tesla and you allow people to use the supercharger network and you allow them, other companies, automakers, to license FSD, etc., then what are people's decisions? It's no longer saying, oh, I have to buy the Tesla, even if I liked another car, the way it looks more or feels. I have to buy it because I want access to the supercharger network, or I want FSD, etc. Now, if you get rid of those moats, it starts to become a design thing. Well, which car do I think, looks the nicest? Which car do I think feels the nicest? Do I enjoy driving the most, etc.? Because I'm going to get those things regardless. And when that happens, I mean, it's just a huge win for Rivian. So, anyways, a lot of catalysts, a lot of positive things for Rivian going into the future. And Rivian's earnings are coming up Tuesday, November 7th, this Tuesday. I am buying up stock like crazy as it's below $20 a share. I am not a seller, to be clear, because I know I haven't posted a video in a while. A lot of you are curious, what I still think of the stock. I am buying shares regularly. I don't care if this stock is down on earnings or if it's up, because I'm not trying to sell the stock right now. I'm not trying to do a quick flip. If it's $25, I'm not selling it, even from 17 to 25 in 1 week. I'm not going to sell it. If it shoots right up to 25, I wouldn't sell it. If it shoots up to 35, I wouldn't sell it. It's not because it might, it's not me saying, hey, I don't want to take a profit. It's probably going to come back down before it continues to go up. It's because I'm in this for the long run. I'm not trying to trade Rivian. I'm trying to own it for many, many years. Now, if it went to $150 tomorrow, obviously I would sell it because I don't think they're worth $150 billion today. Do I think they can be that in the future? For sure. But it's all relative. Do I think that it's okay to buy them for $15 billion, $20 billion, $25 billion, $35 billion, $40 billion? Yeah, I still think even if it was a $40 billion company, if I didn't have as many shares as I have and I wanted to accumulate more, I'd be happy to buy them for the long run prospects because there is so much money to be made when you're looking at a 5 to 10 year time frame. Now, although I might not be, selling or buying if the stock is up or down on earnings, I am going to care that the stock basically is executing, that the management team is executing on the long-term goals. That is what I'm really looking forward to making sure is still on track, because it's not about, the stock price. It's about the company's performance and how it's moving. Now, sometimes those correlate, but sometimes they don't. if you're in this for the long run and if it's a very long-term goal that's being built. Now, if you made it to the end, thank you so much for watching. Please subscribe to the channel, like this video if you haven't liked it, and for whatever it's worth, I think that Rivian's going to 3x, get to $50 a share before Tesla does a 2x, which would be $440 a share or so from Friday's price. I also think Rivian even has a potential to 10x back to its past all-time highs over the long period of time, getting to around a $200 billion market cap. And I think that would happen before Tesla does a 5x, becoming a $3.5 trillion company. So when comparing it to Tesla, I do like my risk reward for Rivian over Tesla right now. There's more risk, obviously, for Rivian because it has to achieve profitability. It has to be able to self-fund itself for its future growth. And if it can achieve that, though, the reward from current levels is far superior than Tesla. Of course, it needs to achieve that, though. That all said, I own Tesla. I think it's an incredible growth ahead. I think the company's amazing. I think Elon's great. And I think it's going to be the largest company in the world eventually. But that doesn't mean from today's levels that you can make as much as you can make on Rivian long term. Until next time.